it's really, really hard right now to become a homeowner. The cost of houses has stalled out because of the very high, by recent standards, mortgage rates, not by historical standards, but by recent standards. And so people are looking at crazy high monthly payments because home values rose so quickly from the market bottom in 2012 through last year that the affordability just went out the window. So people are looking for any creative way to be able to buy a home. Most common people are doing now is they're going for an adjustable rate loan. And ARMs grow in popularity and then vanish depending on what's going on with the interest rate environment. The thinking right now, and I'm open-minded on this, is that interest rates are higher than they will be if we look a few years down the road on mortgages. And so even though taking out what's known as a 5-year ARM is risky when you're buying a home, you will get normally a meaningfully lower rate than you would if you go into a traditional 30-year fixed. In a 5-year ARM, your rate is set, your payments are set based on a 30-year term, but the rate is only guaranteed to you for the first 60 months. And there are variations of this where it's set for 7 years, first 10 years, but really the interest rate break benefit is at 5 years. And so it is a calculated risk that you're not going to be stuck in a really burdensome loan if you can't refi it in that 5-year window. And then the rate resets once a year typically based on then current interest rates. So this is something that people are doing that, again, I'm open-minded on as an alternative to paying today's high rates on a 30-year fixed. The second thing that's hot right now, I'm not a fan of. It's being heavily promoted in advertising and also through ads on the web and the rest, is the 1% down payment. It's because people are trying to buy a home, they're stretched to come up with money, and the 1% down, well, on a $300,000 home, you got to come up with $3,000. Where usually, to get in a home, you need 5% down, so you got to come up with $15,000 in that scenario. And a lot of people, that's a bridge too far. Somebody comes along and says, you only have to have the 1% down. They're like, great, I'm going to do this. But then what are you doing? You're upside down on your home. Upside down. Because the cost, if later you needed to sell your home, and my guess is that home values are not going to escalate like they have in that 10-year window. So when you go to sell a home, with commissions and other selling expenses and all the rest, if you borrow 99% of the cost of the home, you're going to be upside down when you go to sell, meaning if you need to sell for years to come, you're going to have to bring money to the closing table to sell. It makes you more subject to potentially ending up in a foreclosure situation. That's really ugly. Plus, let's add more fun into this. If you finance 99% of the purchase instead of 95 or 90 or something like that, your monthly payment is now based on a higher balance And then in turn, at these higher rates, you have a higher monthly payment. So I'd say that this is something I can't think of circumstances where I would recommend it. And it's not a scam. It's not a ripoff. In my opinion, you're ripping off yourself in these 1% down payment loans.